Hello traders, it's Sunday, May 7th. We're about 2 hours before the S&P futures open up, so we don't really know what the overnight action is going to look like. It doesn't really matter. We'll get into that in just a minute. We're going to cover the last two picks that I posted. Then we're going to take a look at what happened in the market the last week, get our market bearings. Then we're going to find a couple of new picks. That's how I conduct all of the videos. So the first pick was Lilly, LLY. I like it on the long side. Stock had a very nice breakout through these high plus trend lines, and the volume was excellent. You can see orange line above zero, great relative strength. Now, the stock has been moving higher on big volume. They recently had some news about the clinical trials from an Alzheimer's drug that they're working on. I'm not here to pass judgment on whether or not the drug is going to be effective or not. All I do is I watch the price action because there are large institutions that spend billions of dollars on research. Those research teams tell them whether or not they think this stock is a good buy, a good value, and how that possible FDA approval might play into its future earnings. So if they think that this stock is going to move higher and that the drug is very promising, it's going to be reflected in the price action. It's that simple. In this case, I loved the big rally up. The stock has shown a lot of relative strength, and you can see how this long green candle has been preserved. Now, it might take a couple of days for this stock to digest all of these gains and that breakout. And there's the earnings. Right there, you can see the B before the open and a very positive reaction to that earnings announcement. So the large institutions like Lilly. That means I like Lilly. It's likely to spend a couple of days. We want to see half of this long green candle preserved. We would like to see the open from that long green candle preserved. If we start drifting much below it, then you have to be a bit concerned that it could come back and test this horizontal breakout. But I'm not looking for anything like that because there were a couple of weak trading days last week, and that was the tell. So if there's a lot of profit taking place on this big run up here, Thursday was a down day in the market. You would have seen a long red candle. A lot of buyers from back in here and here and here would have been anxious to take profits on this news release. They didn't. So that tells me the stock has buyers. Now, Friday, the market went higher. It didn't participate. It's just going to take a little time to digest these gains. But in the course of the next few days or the next week, you're going to start to see Lilly grind higher. A lot of people have difficulty. It's a stumbling block. It's a mental block. They cannot and will not buy a stock that is making a new high. Oftentimes, that type of restraint is very good because not all breakouts are the same. And oftentimes you will get a breakout to a new high and it'll come right back in. But the key is that you have to learn which breakouts are worth buying and which ones aren't. And in this particular case, given the news, given the earnings reaction, given the stock's ability to weather a pullback in the market, all of these things, the volume, they tell me this stock wants to go higher. And if you look back to my previous long, it was SHOP last Sunday. I love this breakout here. Actually, this might have been one of the stocks that I highlighted on Thursday. I know I highlighted it in the chat room, but it was similar. You had this nice big breakout here, and you had this breakout through horizontal resistance, and there's your follow through. So in this particular case, the stock was able to add onto that breakout right away and onto those gains. SHOP could be my long of the day. I know I've recently highlighted it, but it could be my long of the day as well. So we're going to take a look at the market. We'll keep SHOP on the back burner for right now, but I really liked the price action on Friday. The bearish pick was MPC, and that is a refiner. You can see we had all of these low plus trend lines. We'll zoom out a little bit to see where they originate. And sometimes we've got to zoom way out for the lines to display properly. That is a major breakdown. I highlighted this stock before the open on Thursday. That's when the video came out. So you would have had ample time to track the stock. And there you can see, we'll go into a 5-minute chart, but you can see the stock actually had a nice drop on Thursday. So there were plenty of opportunities to short this right out of the opening gate if you so chose. There you can see there's the opening, nice gap down, and the stock fell from about 109.50 down to 105. Lots of opportunities to make money on the short side on that one. So that was an excellent pick. Lily's just going to take a little bit of time. I would keep that on your radar. Any kind of market pullback where the stock holds all of the gains from that long green candle, even better, because that is simply further confirmation that buyers are still in there and they're aggressive. So let's take a look at what the market did, or actually, I should say, what the market didn't do. This set up as a really big week. In fact, the last couple of weeks have been super important because we had plenty of catalysts that could have pushed the market through to a new relative high. We had earnings season unwinding with all the mega cap tech companies announcing. We had Meta and Google and Microsoft, Amazon all had announced over a week ago, but the market wasn't able to rally. You can see how it rallied up a little bit on those earnings. And the mega cap tech stocks have led the rally. There are about 8 stocks that have accounted for the S&P 500 gain so far this year. So 8 little stocks, actually they're not so little. 8 of these mega cap tech companies have accounted for all the S&P 500 gains this year. So it's a very narrowly defined market rally. Not particularly healthy. Well, when you have all these mega cap tech companies on deck ready to announce, they can drive the market one way or the other. If the earnings are gangbuster good, boom, we're going to break out to a new all-time high. Well, we actually did get favorable earnings reactions from those companies, but the market did not break out. So, okay, kind of a yawner. Here we are in wait and see mode again. We're going to wait for these mega cap tech companies and maybe they'll fall flat on their face and the market will pull back, or maybe they'll produce some really good earnings reactions and we'll get a breakout to the upside. Well, we didn't get either one of those two outcomes. So now we got into this last week. Okay, well, we have ISM manufacturing, ISM services, ADP, we have the jobs report. That could be really important economic news that could either fuel us higher or lower. We had the FOMC statement. Everybody's waiting for the FOMC statement because they want to know what the Fed is going to do next. And we also had Apple earnings. The last of the tech giants was going to announce earnings. Those were going to come out Thursday after the close. Here's where we are, still below that major resistance level. So lots of movement. And if you look at the high from last Monday, and if you take a look at the low from Thursday, and you look at where we closed, we're pretty much in the middle of that weekly range. I personally suspect that the market is just going to be trapped in this range for quite a while. There's just not enough good news to push the market through. Earnings were decent, yes, but very tightly confined. We need to see broad-based participation in those earnings. And asset managers are not going to get super aggressive when we still have these credit concerns boiling underneath the surface. We started to hear that there were a few other new bank names circulated that have weak balance sheets last week. The Fed is as hawkish as ever. The market is pricing in a rate cut in Q4. The Fed chairman came out and said, hey, we're leaving the gate open here for possible future rate hikes. We're not anywhere close to thinking about a rate cut. So there's a pretty big disconnect happening. You also have signs of a recession looming. Who knows if that's going to play out or not? We won't know probably for a few more months, if all the rate hikes to this point are going to manifest into a recession or not. And you also have politicians playing chicken, trying to get the other side to flinch as we get into the debt ceiling. Well, there are only a handful of days when the House and Senate are in session at the same time, so there's not a lot of time for them to resolve that problem. If they drag their feet, and I have seen this before, I've seen Republicans playing this game, I've seen Democrats playing this game. They drag it out, they try and produce leverage as much as they can. They try and evaluate which side is going to take the blame. And then at the 12th hour, they get a deal done. And sometimes it even goes a little bit past the 12th hour, and then they're scrambling to kick the can down the road a week or 2 weeks. And I've seen it where the national parks were getting shut down. So they will take it to the bitter end to try and gain an edge on the other party. I hope we don't come to that type of resolution, but if we do, the market is going to send them a signal and the market is going to sell off. And then they'll go, hey, we're at the 12th hour. We better get something done. So that risk also looms out there. My personal opinion is I'm a little bit more bearish in here than I am bullish, but I am extremely neutral. I don't think even if we get a sell-off that it's going to put us down back to this low. I think we might test the major moving averages. So let me put the major moving averages up and you can see where they come into play. And perhaps we can get to those major moving averages, but I think the market's going to find support in here. The 100-day moving average splits the 50 and the 200, comes into play around 400. I think that's probably going to be as low as we get. It's going to take some negative news, though. It's going to take the politicians continuing to drag their feet. The one thing that I will say is that now that mega cap tech companies have announced, we know that they have a little bit of gas left in the tank, but not much. But they have been fueling the market rally to this point. Shorts tend to be relatively passive ahead of those major earnings announcements because those tech giants have been fueling the rally. That's where your upside surprise has always been. So shorts are relatively passive until all of them have announced earnings. Well, they've all announced. So anyone that's looking to take profits up here, anybody that's looking to short the market, now that the big tech companies have reported, they start to get a little bit more aggressive, a little bit more bold. Some of the buyers who were thinking that this would be a nice place to take profits, but I might as well wait for those mega cap tech companies to announce to see if they maybe generate a little bit more upside in the market. No, they didn't. So those sellers here who are waiting for those earnings are going to be a little bit more aggressive with their profit taking. We do have the CPI coming out this week and the PPI. Those are really the only numbers that the market's going to care about this week as far as economic releases. And then we go into a very quiet period. There are just not going to be a lot of news items. We had all of that news coming out over the course of the last 2 weeks. Those were the potential catalysts, and they did not produce. So what do we do now? Now we're kind of dead in the water. And I hate to say this, this is not the trading environment I want to see. It's going to be very difficult to make money. You're going to have low volume, and you can see how much of this rally right in here was just a bounce. Very, very light volume. The Fed came in here, injected a bunch of liquidity into the system when we had the SIVB fail, and so that reduced the risk, and so shorts had to cover, and then we've basically just been sitting here. So I think we've got a chance to come down and test these major moving averages. If we do, there'll be some opportunities to perhaps get a little bit more aggressive with longs, especially on some of those big tech names. But up in here, it's not worth it because there's a chance for us to visit this area and a small chance now for us to break out to the upside. So all the while, if you are trading these big cap tech companies and you're long premium, you're going to be exposed to time decay. So I'm still in day trading mode. we might be in day trading mode for most of the summer until all this plays out. We need to know what the economic conditions are going to be like, what the impact of the Fed to this point is going to be, how is the banking sector going to come out of all of this. Could go either way as far as I'm concerned. So we're in wait and see mode. And it'll always be waiting for that next news event, waiting for that next news event. And there's a good chance CPI on Wednesday. Tuesday is probably going to be a relatively dull inside trading day because nobody's going to take any large positions ahead of that major news event. So we're going to take a look and we're going to see if we can find a nice long and a nice short. I do like SHOP a lot. So let's go in and take a look at that. And it's much easier, by the way, right now to find good longs than it is to find good shorts because the market has been drifting higher. But you can see how the stock opened up Friday and then it continued to grind higher, closing on its high of the day. In particular, I love, and these are our automated trend lines, I love this breakout above these high plus trend lines and this high minus trend line. And you can see there's another important one that comes into play here. Earnings before the open, stock rallies and closes above that trend line, and Friday grind, grind, grind higher. We can zoom out and see where all those trend lines come into play. We can also see that this stock has plenty of room to run. Big sell-off, nice base, higher lows, higher highs. Yeah, this is the kind of thing we want to see through all the major moving averages, big volume, great relative strength. I think SHOP is going to be the long pick of the day. I absolutely love this price action. So that's a stock that you're going to want to be watching. As I've mentioned to you before, if the market opens higher tomorrow, Monday, we don't chase SHOP. We want to make sure that it is participating in the rally and that is leading the charge higher. We want to wait to see what the market does. If there's a pullback, we want to see SHOP tread water. As soon as that pullback finds support, then we have an opportunity to buy SHOP. So that's what I'm going to be looking for because I want to be a little careful. The market had a very light volume rally on Friday. It was a nice float higher, but you can see the blue line is below zero almost the entire day. Even into the close, we had a little bit of volume come in, but that's typical. Very, very quiet day with just a tiny little float higher, tiny, tiny, tiny little bodied candles. So not a lot of conviction on the part of buyers. If buyers were in there aggressively buying, you would have seen long stacked green candles on heavy volume the entire day. We didn't get that. In fact, if we want to go back, we could take a look at the FOMC reaction. One of the most muted reactions I can recall in probably the last year and a half. This is where the FOMC statement came out. Long tails, long wicks, a whole lot of nothing for an entire hour, even after the press conference, nothing. And then the market decided, the Fed was a little more hawkish than we would like, so they sold it off. And then Thursday we had a little bit of follow through selling. But in general, not a big reaction. So you have to be very careful when you're entering your trades right now. As I had mentioned, SHOP is the kind of stock where if the market is down like this, you want to see it treading water. Let's put an overlay up and let's go into SHOP on that 5-minute basis and let's take a look at what it did. Well, that was an earnings announcement, okay? But this is the price action that we want to see. And let me put up the SPY overlay and you'll be able to see. So here you've got this market sell-off. And you can see how the stock was able to hold its own. When the market dipped right in here a little bit on Friday, what did the stock do? It held all the gains. In fact, it was drifting higher. This is the kind of relative strength that we're looking for. Orange line above zero. That's exactly the tell that this stock is going to keep moving up. There's your market decline. Look at how well the stock just compressed right on its high. So even in here around the 6140 level, the stock went up not quite a dollar, but pretty close. You didn't have that much risk because the market had not dipped all day. The stock just grinding, grinding, grinding higher. So you get that market pullback. Make sure you have relative strength. When the market finds support, SHOP is a stock that you're going to want to be long. And we're going to try and find similar on the short side. I can go into a couple of bullish searches and see if I can find anything else that might look good. The daily chart is always where you have to start. I'm going to take off that SPY overlay to clear things up a little bit here. And we'll take a look at a couple of stocks here. CRM was a nice one on Friday, but it still has that horizontal resistance. Remember, we want to break through these levels with a long green candle on heavy volume. That's how we know that those breakouts are legit. And I'm just kind of going through this list, seeing if I can spot anything else that looks good. Actually, I do recall a stock that looked good from Friday. This is a nice breakout on a high minus trend line. It's got to get above the 200-day moving average. That's LYV. And let's see which search that might have come up in. Strong after earnings, possibly. Breakout. Breakout times 2 it was on. DKNG. DraftKings. I like this. This is a horizontal compression, earnings after the close, stock gaps up through this major high minus trend line. Let's zoom out a little bit. Let's see where that comes into play. You can see all the way from back here. That's a nice breakout. This is also a nice high plus breakout above all the major moving averages, big volume, post earnings, lots of room to run. DKNG could easily be my long pick of the day as well. So similar in some respects to the shop chart pattern that I had highlighted as well, but it looks good. So now you got a couple of different stocks that you can evaluate for the long side. Let's go into some bearish searches and let's see what we've got cooking there. Just going to go in and take a look. I don't really have to go any further than this because this is a really good looking chart on the short side. Okay, so this was in red royal flush. This means that the stock is bearish across all time frames with our trade signals, buy and sell trade signals. I can overlay those and you can see where they come into play, but in this particular case, every time frame is bearish. And there's your sell signal right there. So it's also on a sell signal on a 5-minute, 15-minute, 30-minute, 1 hour, 4 hour basis. And it's got a breakdown through these major trend line levels. So earnings after the close there. Let's zoom in on that. So yeah, this is a major breakdown. Big volume. Let's take a look at what happened to the stock on Friday to see if that provides us with other information as well. And here you can see the stock opened higher with the market. And this is another reason that you don't want to chase stocks on the open because you never really know what the stock is going to do. All ships rise with the tide. And when you have a market that is gapping up, you can't trust that rally because oftentimes those gains are given right back as they were on Friday with this stock. So let's put the SPY overlay up and you'll see market up, 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 stock retracing, making a new low of the day, filling in the gap. Lots of relative weakness the entire day. Stock closing on its low after a really nice market rally. And we already know that we like this short on a daily basis because of those technical breakdowns right in there. So yes, it looks good. Let's zoom out one more time and see how much more room it has to the downside. Well, it's actually got quite a bit of room down to that $70 price level. There's a little bit of horizontal support right in here that it's going to have to battle, but after that, it can keep right on going down. So how do you play this stock? Well, if the market's starting to look weak this week, Monday, Tuesday, Wednesday, whatever day, which is a very important point, buyers and sellers are paired off right now. This is not a go, see you later market that's going to rally like gangbusters. I don't care how good the rally looks. At some point, that rally is going to run out of steam. And then sellers are going to take the ball and they're going to see what they can do with it. Well, when you get to those moments where the rally has exhausted itself and you start seeing tails and or wicks primarily at a high or tiny compressed candles, then you want to start looking for these bearish stocks, especially if we have a OneOp indicator that happens to agree with that move. So right here on Thursday, this is the FOMC statement. There's the open on Thursday. You've got the OneOp indicator crossing. This is a bearish cross. You know you've got an opportunity to short right in here. You get a bullish cross that produces nothing, you've got an opportunity to add right in there. And then the market kind of flounders around with a double bottom low here. Now you've got a nice opportunity in here where the market looks like it can rally a little bit. Well, this is where you would want to try some longs. And that's the type of timing that you have to use. On Friday, we had a little bit different environment. We had a gap and go. Market gapped up, hardly any retracement. Yes, mixed candles, some resistance in here, but nothing organized. A long red candle like that and a long red candle down to the VWAP instantly. Okay, well, that would get my attention and that would get me thinking that this bearish cycle might actually produce. But that's not what we saw. We saw just lots of back and forth, back and forth. All the gains have been preserved. And then, of course, this will attract some shorts. And then we get that little bit of lift off later in the day. But there's no reason on a day like Friday to get aggressive with any short positions. There were other days last week when the market actually gave us opportunities on both sides. And let's see if we've got maybe Tuesday. This is Tuesday. Really nice big decline. So you get this big decline in the back of your mind, you're thinking, hey, Pete told me that both sides are probably going to have a chance to get the ball. So you start getting some bullish hammers in here, and all of a sudden you start going the other way. You've got a deep cross here on OneOp and rally mode in here. So just wait for these signs. When you start getting a big move, the exhaustion on the way down will come in the form of tails and very, very tiny, tiny little bodies. And then, yes, if you're using option stalker, watch for that bullish OneOp cross. But you can also see here, this is a light volume rally up in here. Actually, volume was pretty decent ahead of the FOMC, but tiny bodied candles, so not a tremendous amount of momentum behind the move. Sellers are going to have their chance. Buyers are going to have their chance. Shop is going to be a great one for you to consider on the long side, along with DraftKings when you get those opportunities lining up. And if the market has run up and you start seeing those tiny bodied candles at the high of the day and you start seeing some wicks, well, you're probably going to get a reversal, and those are the opportunities where you want to be looking for a short like Etsy. Thanks so much for watching, everyone. Good luck with your trading. I wish I could tell you that I want to do a lot of swing trading, that I'm confident here, that I feel that the market lows are in. When there's a credit crisis brewing, I don't know that it's going to manifest into a credit crisis yet. Nobody knows that. I just know that when the dominoes start to fall, they fall very, very quickly, very, very quickly. And if you think that, oh, hey, I'm going to have a whole basket of long positions on it and I'll be able to instantly hedge, I'm going to tell you that the futures can drop 100 points in a day. We saw it last year when you're in bearish market mode. I mean, that rug gets pulled out very, very quickly. And you don't have a lot of time to adjust positions. So longer term swing trades, I think it's still prudent to keep those to a minimum. Really focus on shorter term trades, focus primarily on day trades and perhaps an overnight position or two. Thanks so much. I'm going to be doing a video on Wednesday, and that will give me a little bit more time between my Sunday night videos. So the trade will have a chance to play out and perform over the course of a few days. Last week I did it on Thursday just because of the FOMC statement. I really wanted to get that out of the way. So Sunday night and Wednesdays are when you can be looking for new videos. Thanks so much. Good luck with your trading. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.